Hey, what's up everyone? Ralph here. So in this video, I'm going to share with you 5 tips to help you get started investing in the stock market. I'll also share with you some strategies that I use to invest. So the first tip is don't invest in individual stocks. This is something that you can do later on when you've built up experience in investing in the stock market. And the reason why I say this is because there's so much risk when it comes to the stock market. And individual stocks is a risky way to start, especially if you don't have any experience. Because the reason is because there's so much volatility, right? It's going up and down. If you're not someone that has any experience or you haven't developed that risk tolerance, it's something that's gonna cause you a lot of pain when it comes to investing in the stock market. You could potentially lose a lot of money. And I'll give you an example for myself. I started investing in the stock market in 2019, right? And 2020 came in, and obviously there was a pandemic. When that pandemic hit, the stock market dropped. So what's the first thing I did? I panicked and I took my money out, which was the wrong thing to do, because even though I put my money back in probably 2 months later, I still made money that year, but I could have made so much more money if I just kept the money that I had in there. And that's the thing, that the market was so good, especially in 2020, that even though if you took money back out and put it back in, you were still making money. But there was so much money that I lost that because I took that money out. And you want to make sure you understand that so many people lose money in the stock market, not because of the stock market itself, it's because how they react to the stock market, right? The way they react to the volatility, the ups and downs. If you're someone that doesn't understand or hasn't had the experience of dealing with that kind of volatility, it's gonna cost you a lot of money in the long run. So if I'm telling you not to invest in stocks, what should you invest in? Well, there's a thing called index funds, right? Index funds is a great way to invest, especially if you're as a beginner, because it spreads out your risk. So let's say you had an individual stock like Apple, and then all of a sudden it went all the way down, it went out of business. You would lose all your money because you had all your money in that particular stock. But the way an index fund work, or ETFs, is you have multiple companies within that stock, right? So you got the S&P 500. There's 500 companies within that stock. So let's say Apple went out of business, you still have 499 stocks, and then another one would add on. So you would still have 500 stocks that you can still invest in, and you wouldn't have to worry about losing all your money. It's a great way to spread out your risk. So that's what I would do at first, because the thing is, another thing with stocks is this requires so much research. You have to research. You're looking at the balance sheet. They're looking at the income statement. You're looking at so much data to make sure you're investing in a good company. So it requires a lot of time. And obviously, if you're a beginner, you probably don't have that time to research these stocks. So index funds is a great way. Index fund ETFs is a great way to get started when it comes to investing in the stock market. So the next tip is keep it simple, right? Now, I know investing in the stock market can seem very complicated, and then of course, if you're new to it, then it's going to seem complicated. But you want to find ways to just keep it very simple, right? You want to invest based on your goals. So so people get into day trading, options trading, obviously investing in long term, short term. You want to make sure you want to keep it very simple, especially if you're a beginner. Like for me, I just focus right now just on index funds. Eventually, I'm gonna get into individual stocks, but I want to do the research when it comes to that. But you want to make sure you keep it simple. Start off with the index funds. Make sure it's something that you understand. Also, if you have a retirement plan like 401ks, IRAs, you want to make sure you do that as well. So keep it very simple. Don't overcomplicate it. And then as you develop more experience and develop more understanding, then if you want to delve into other things, then you can do that. But keep it very simple, especially in the beginning, because it's a very complicated thing, and you're dealing with money that's very important to you. So keep it very simple, and as you continue to learn, then you can expand to other ways. So the next tip is do it yourself. I understand that for a lot of people, when they get started investing in the stock market, they tend to think that, I need some help, right? And the first thing a lot of people do is they think about getting an advisor, right? But the thing is, an advisor, although can be necessary for a lot of people, especially if you're starting out, you really don't need it, because one thing you need to understand is one thing that cuts into a lot of people's wealth when it comes to the stock market is fees. And these financial advisors charge a lot of money, especially when it comes to your stock. They usually charge anywhere from up to 2%, and you're probably thinking, that's not a lot. But if you look at history, you look at the data, that there's graphs that show you that over time, let's say over 30 years that you've been investing in the stock market, and if you're someone that has your stock portfolio has anywhere from 1% to 2%, over time that accumulates, and it's a lot of money that you find yourself that you're losing just because you hire that financial advisor. So you want to make sure, in the beginning, you could is a good way, a more cost-effective way of doing that, just obviously investing in index funds, because they're very low cost, right? Their fees are like, if you're depending on the index fund that you invest in, they can be anywhere from like, they got 0.01%, 0.03%, 0.07%, depending on the index fund. So it's very low cost, very cost effective, and it's not going to cut into your wealth over time. So over a 30-year period, depending on how long you keep your money in it. So it's a great way. It's a very cost effective way to do it, and you don't really need to hire a financial advisor, especially if you keep it very simple. Like I mentioned earlier, keep it very simple, and all you got to do is just basically purchase the index funds, ETFs. It's a very easy way to do that. You'll find yourself, you really don't need that financial advisor, especially when you're getting started. So the next tip is to automate your investing, right? So if you're someone that has consistent income coming in, then this shouldn't be an issue for you, right? So you want to make sure that you're investing consistently, right? And that's the way, whether it's weekly, monthly, you want to make sure that you are on a consistent basis, making sure you're investing in the stock market. And the reason why you do this is because a lot of people, they try to time the market, right? They're like, oh, I'm gonna invest when is up, or I'm gonna invest when it's coming down. And we all know, if you talk to any experienced investor, there's no way to time the market. So the best thing you want to do is like use this method called dollar cost averaging, where whether it's every week or every month, you're consistently investing in your portfolio. So regardless if the market is up or down, as long as you're consistent, you should be able to maximize the money that you're making investing in the stock market. So you want to just make sure you consistently do that, automate your investing, and make sure that you're not just saying, oh, I invest this month and then a year from now I invest again. You want to make sure you're doing that on a consistent basis. So the final tip is continue to educate yourself, right? Because like I mentioned earlier, there's so many different things that you can invest in, whether it's like options trading, day trading, or just investing long term. But a great way to ease yourself into investing is obviously investing in index funds, right? Because for a lot of people, what stops people from investing is that, I gotta learn, I gotta understand what I'm investing in, which is true. You should do that, but that usually comes with investing in stocks. If you're gonna invest in individual stocks, you're gonna have to do a lot of research, and it's gonna take time. So it stops a lot of people from investing in the market altogether. But if you're gonna invest in index funds, it's a great way to ease yourself into the market without taking so much risk. So all you gotta do is like figure out which index fund that you're going to invest in, and then basically just make sure, like I said, invest in that on a consistent basis. So I think investing in an index fund is a great way to ease yourself without taking too much of the risk. But you want to make sure you're constantly educating yourself, learning about different companies, understanding index funds, fees, and stuff like that. And as you're investing in the index fund, you can learn as you go. So you want to make sure you get started. Don't let the not understanding or not having enough information stop you from investing. You can start off very small. Index funds are a great way to get started, and then it can help you as you grow and gain more experience. So finally, like in conclusion, like I look at stock market is a great way. Everybody should be looking to get to a point where they're investing in stocks. I know a lot of people think, oh, it's rigged, it's a scam. Look at, man, that's where a lot of the big money is going, right? And you need to understand it's only rigged if you really don't understand what you're doing, right? If you're being smart about it, if you're thinking long term in terms of stocks, then in the end you will win, right? Eventually in the end you will build that wealth. There's a lot of people that try to make fast money, and they think, oh man, I'm not making money right away, where they have that short term mentality, is where a lot of people get wrong. And especially when it comes to the stock market, not understanding that you have to understand your risk tolerance, right? Understand that the market is going to go up, it's going to go down. So you want to make sure you understand and have a good idea of how the stock market works. But everyone should be getting into. You should be thinking about being a owner instead of a consumer. This is the way you build wealth over time. So I hope you guys found this information helpful. If you got any comments or questions, make sure to leave it down below. Hit the like button, share, and if you haven't done so already, make sure to subscribe. Right? So you guys take care and have a good one. Later.